No, no, no. Don't worry, don't worry. So we've started. Okay, what's the question? You want to take me?
When you draw your children on that field,
Okay.
you still have it will still appear on good. Is there a way that it cannot appear that one that you draw on maybe trillion pound versus
No, it will not appear on gold.
it's appearing here.
No, it's not supposed to. If you delete this one now, it will not show on your GBP USD. I don't understand.
This is gold. And
Yes.
this is what I did on GPP.
No, 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 it's not the same thing. Don't worry. See, as it is now, delete it. Yeah, go to your GBP USD. So it's quite different. Whatever you do on that other chart, will not show. And so, good morning, everybody. Pastor will not be around, or he's on his way. According to him, I got the notification that I should be taking the class either before he arrives or he might not be able to come. So we stopped, I think, yesterday afternoon. Yesterday afternoon, we stopped with some analysis. Let me open the trading view here so that I'll be able to see some people's analysis, how it's played out. So did anybody place trade yesterday?
Oh, sorry.
Did anybody place trade yesterday? Did anybody place trade yesterday? Nobody.
Yeah. So minus. Minus.
Okay. I'm trying to find Ima Farouk, Ima OJ, and I'm not seeing their chart though.
No, this is never.
And boys on this account.
Yeah.
Is this your trading view account? Just bring me that laptop, sorry. Let me quickly see. That's what I want to. That's what I want to do. I don't know why it's not bringing it here. With JPY, Abi. I've seen it. Don't worry. I'll use. I'll use this one. Okay. Okay, so it's to show everybody their analysis of yesterday. It's to show everybody their analysis of yesterday. I think this is Emmanuel's analysis. Was indicating that price will come here and go all the way up. And who else? OJ's own hit TP yesterday. Bullish trend. We are just seeing the bullish trend, so we should just buy. I think this person's own was this Samuel's analysis yesterday. Do you remember that this is your analysis yesterday? Okay, so did you pick the trade? That's why I said when you use trading view to analyze and mark, you just use your MT5, draw your horizontal line, mark that point. So you wait for price to come back, or you can set alert on your trading view. So if you right click, you will see add alert. Sorry. So you can write a message. Like sometimes for me, I used to put buy entry, copy, and I'll paste the alert name. So then don't set it on once every time. Also send notification to email, send notification on the app, then add play sound. So that if it comes up, for example, it will play a sound for you. So you create it and you have your alerts there. So anytime price crosses that area, I'm trying to put it very close to so that price will trigger it. So you receive the alert. And if you go to your Gmail, if you have the app on your phone, you will receive the alert on your phone and you receive the alert on your trading view. So like this, you will receive it as a notification on your phone. So you quickly go to open your position. I don't know if you understand what I'm saying. So this for the but on a free account, you're only allowed to use one alert. So if you now have the paid version, that's when you can now use 10, 15 alerts. So but majorly for us now, it's just one since we are trading 1 pair. So I think your trade is currently active. Who else? Somebody else did we did somebody else analysis. Mrs. Shade. No, Bitcoin, we did not pick any trade now. Mrs. Shade's trade missed by one pip? Missed by 5 pips. So you can see the entry. Funny enough, it hits stop loss. So some days trade will always behave like this, no matter how you want to do it. I mean, some days trade will always behave like this. No, I mean it did not hit stop loss, it hits your TP, but it didn't hit your entry. So some days trade will be like this. So we are supposed to use Samson and David. Yes, it's now. And since Pastor is not around, we can still use now to do it. So in the afternoon, we just come and check where your trade is moving. So nobody has any trade idea at all. Or should we go over some things? Is there anything you need understanding on, questions and answer? Feel free to ask now. Even though it's silly questions, I will answer. Yes, now. So I think one of the things I want to talk about today is moving average. And I know most of us has had this confusion of moving average. And I think pastors moving average is 20, 50, 100, 200, and I think 500. Now, it is not necessary you need all the four. He uses all the four. But for a beginner, I will advise you use one. Don't go beyond one. If you want to go beyond two, there is a style they use if you want to use two moving average. And I think maybe I will teach that this morning. So we have what we call, let me just put SMA crossing. And we also have what we call, okay, SMA crossing, another SMA. So it is either you are having a moving average crossing another moving average, or you are having a moving average crossing candlestick. So I think it's either of these two. You're having, okay, good, an SMA crossing an SMA, which is simple moving average, or you are having an SMA crossing a candlestick. So this serves as a confirmation of your bias. So first things first rule of moving average, you always buy above the moving average and you sell below the moving average. You buy above the moving average and you sell below the moving average. So Pastor uses 4 moving average, but ideally I will advise we use 1, and one of those moving averages moving average either 100 or 200. So I will show us this morning. I think I don't need this again. Thank you. Let me use that. That's far better. So we are either going to be using two styles of moving average. It depends on you. If you want to use two, if you are using 2 moving average, you are going to be using the moving average crossing. So a moving average crossing another moving average will serve as your confirmation or a direction, either on your anchor time frame or your microstructure. It's not turning on. Usually. Is it dead? Zero, zero, 1, 2. So either on your MT4 or on your trading view, you can use moving average. I think I showed us yesterday how to use moving average on our MT4. When you go to your your MT5, sorry. I'm coming. Let me quickly share the link to the group. So since we've known the idea of moving average is simple. When you have a moving average, you are expected to buy when your candlestick is above the moving average. Then you look for buying opportunities. When your candlestick is below the moving average, this serves as a confirmation. Oh. Some people use it as entry. You can if you want to, but ideally it's not ideal to isolate one confluence to another. I don't know if you understand. Like instead of using moving average alone, you can use moving average and a key zone. You can use moving average and candlestick confirmation, like an engulfing candle. For example, if at an SMA crossing, a candlestick has a very bearish engulfing candle, then this can serve as a confirmation for a new sell entry. So your SMA just serves as trend confirmation, let me put it that way. So you know where the trend is going to. SMA. So I want to use SMA 200 and should I use 200 or 100? Let me use 100. Okay, so here we have 20, 50, 100, 200. So I want to remove 120. So you guys will see what I'm talking about. So 200 is red, yellow is 50. So let's say, for example, right, you are on your 1 hour, which is 1 hour serves as an anchor time frame, and you see something like this. So this is a crossing. I don't know if you understand. So if you see here, we have some sort of resistance, which is 1. So you can see price did something like this. Then you now have your moving average 200. Then you also have your moving average 50 also crossing. So what this two is indicating to you is the so-called trend that, for example, let's say we are all the way here, right? If we want to classify this trend before this indication, let me come here. If we want to classify this trend, we can actually say this trend is a bullish trend. Right or wrong? This is a bullish trend because we are already having higher highs, higher lows, right? But right around here, we have some sort of resistance and a confirmation of a moving average cross. So now, what did we get next again? Our market structure. So market structure says that when we are having a downtrend, we are going to have lower lows and lower highs. So what we want to see here is this low. We should make a lower low. And what was the first thing we got? We got this low. So we had a lower low. So you can see how you can add it as a confluence to confirm, to make you feel more safer, more confident in your setup, rather than, okay, should I buy here since we're already hitting this support zone? But mind you, yes, every support zone, we should take it in consideration. But not every support zone will support the overall trend. And sometimes moving average can give you a quick hint that the trend is going to change. Let's go to another asset class, for example. Let me go to, I think, USD JPY. I'm not hearing. So, okay, very, very good. Very good. We can see on USD JPY, this is a very, very good example, right? You can see for every turning point, the moving average are crossing each other. That's what we call SMA to SMA crossing. Now, we also have SMA to candlestick crossing. So when a candlestick is crossing an SMA, sorry, it's not SMA to candlestick, it's candlestick to SMA. Let me correct that. It is candlestick to SMA crossing. So is either you are having SMA to SMA crossing or you are having candlestick to SMA crossing. So around here, let me zoom in so you guys will see it. There's the brush. So around here, what are we going to call this? Sorry. What are we going to call this? To what I've been saying so far, what are we going to call that? Candlestick to SMA crossing. Please try and pay attention. Thank you very much. What I was saying is we have two types of crossing. Pastor uses over four SMAs, right? But ideally for a beginner, I will advise you use either 2 or 1. So if you are using 1 SMA, you are going to be using candlestick to SMA crossing. If you are using 2, you are going to use candlestick to SMA crossing or SMA to SMA crossing as a confluence to your bias, not as using it to pick a trade, but adding it as a reason why you picked that trade. So let's say, for example, right, this is coming. So now, for example, this is price. What are we going to call this trend? A bullish trend, right? Now, what gives you a confirmation that the trend is changing is the SMA. Are you people with me?
Yes.
What gives you a confirmation adds to your bias that, okay, it's like we are not going to be bullish again. When I see a lower low, I also want to see that lower low cross the SMA. Do you get it? So now, what we have here now is what? A candlestick to SMA crossing. So when this happens now, what you are waiting for is you want price to start printing lower lows and lower highs. So, and when we keep moving on, we keep seeing price print that. Now, when price wants to change trend again, what the price do? Price starts, you know, one of the things Pastor said is if your candlestick is wiggling by the side of the SMA, then that means we are having a consolidation or a ranging market. So the market is not in any direction. So, but once price start moving, we will now have price above your SMA. So giving you confirmation for more buyers. Now you cannot add that with your support and your resistance levels. Do you people get the point now? So for example, now in this case of USD JPY, as you keep seeing price here, why you should have an extra SMA is for a confluence like this. So when you are having your 20, what I'm having now is 20 and 200. 20 and 200. So what 20 is showing me here is price is consolidating. We are in a range. Now, 200 here now has given me confirmation that, okay, this trend is changing. Now, also, the bias behind moving average is you are going to be looking for buys above, when your candlestick is above your SM, your moving average. And you'll be looking for sell when your candlestick is below your moving average. So you don't need to be having over 4. Pastor uses 4, but so that you won't have cluster of thoughts that, okay, price has respected 50, price has, no. You just need to have 20, 200. You can also have 10, 100. You can also have 50, 200. It depends on your own preference. Like over time, I've studied that I feel very comfortable with 20 and 200. So it gives me clearer direction of the market. So for example, let's now go to our current market profile, which is gold, right? I think yesterday some people gave us a very, very good setup. Samuel's setup is currently active. I think Samson is supposed to give us some explanation on his setup today. But if we are looking at gold now, what can we say? What is our first idea that hits us as we look at gold? On your anchor time frame, this is your anchor time frame. It's ranging. Why did you say it's ranging, sir? Yes, you should have a reason why it is ranging. So who else said it is ranging? Who is in support of it is ranging? You. Okay, for the past few hours. Okay, very, very good. So that means you are looking at only this picture here. Just that particular place. And you're with us. What's your bias on gold? It's bullish. Why do you say it's bullish? Okay, you should give your reasons. What is going up? One of the things we should be able to do as traders is to express ourselves. I actually understand what you're trying to say, but you are not giving the right terms to it. If you were to explain for somebody that just came in now and asked you that, Anu, explain this to me, how will you explain? So everybody is actually correct. The market is ranging, but we are in a bullish trend. Currently, for the past 1, 2, 3, 4, 5, 6 hours, we've been in a very tight consolidation. So now one of the things I want to add in concept to you people, I think Pastor has mentioned this, but we've not been very, very particular on it. Price has 3 cycles. The market has 3 cycles. And those 3 cycles happen every day, every time. And in any time frame you are on, you will always see it. And number 1 cycle is market range. Then when market range, we now have an expansion, or as we call it, a breakout of that range, now markets will either do two things, or sometimes it may do three of them. One of them is it will either reverse, it will have a reversal, or it will retest and continue. So in this scenario, you will have market cycle behave like this: range, breakout, retest, continue. This is one. Range, breakout, reverse, continue. So you are always having markets doing this. So for example now, in this case now, we can see that market currently, we had an uptrend. Market came down. The current situation of the market is what? The market is ranging. So what are we supposed to do? We are supposed to wait for a breakout. So on gold now, we can actually say the current structure of the microstructure is what? Is a range. So you can't pick any trade, and it's not safe to pick a trade in a range, only if you have a bigger range. So for gold now, what will be your bias? I think who can help us out here? What do you think you will do now in this situation? In this situation now, do you feel that the market will continue selling or it will continue going up? There should always be a bias. You still want to wait. What do you want to wait for, sir? What confirmation? Or breakdown? Okay. The health of the candlestick. So I should zoom in. Okay. And Domina, you wanted to say something.
Market is rich and overall and check 4 hours.
That range is retracement. Okay.
So market now is basically waiting, just wait, like what you said, test to continue to trend.
Okay.
Question quick. Those two candlesticks, that red or that big yellow.
Okay.
Up and down.
Okay.
Is that one taking profit? Because it looks like what we call that one. You not looking like that.
So to my own ideology, right? Traders take profits at different areas, different key zone. It can be taking profits, however it may be, and it might not be profit taking also, because we also have people that are trading against each other. We as speculators, we don't know who sold gold to the dollar or what caused this drop. Sometimes it is panic, sometimes it is taking profits. So we can agree that, okay, probably here, this is taking profit, right? One of the things I need you people to know is the people that are trading this market, they are also human beings. So they behave the same way you behave when you are trading on your small accounts. Let me give you, for instance, because we've not started live trading, but it is going to happen to you people. So let's say, for instance, you place a trade. The trade is running in profits. And next thing you see one big candle drop. Boom. You are like, this market will come back my entry. Let me close. Now, what you've done is you've taken the little profit because of the candlestick you've seen. likewise also those people trading with big capital. Let's say, for example, JP Morgan was the one that caused this big candle. That's why most of the times you will always see that when we have a big candle, we will have a follow through. Why do we have a follow through? It's because the first people that saw that big candle now had confluence that this thing will continue. So as they are taking their own profits, the market keeps collapsing. Now, likewise also, when the market is buying, they are waiting for buyers that are coming in, or sellers wants to sell to a potential buyer, right? Now, sometimes what used to happen in the market is, it is either we have a lot of sellers than buyers, or we have a lot of buyers than sellers. So if we have people buying more of this asset class, the asset class will keep appreciating because we are buying. There are fewer sellers. Now, in this case here, we have, I don't want to bring confusion to you people. We have, inside market cycle, we have what we call equilibrium. Fair price between a buyer and a seller. So, for example, somebody bought gold at, let me mark the price level. Somebody bought gold at 5163.42. 5163.42. If you check around that area, we had a consolidation around this area, right? Can you see that we've had a series of market cycle now? We've had a consolidation, we've had an expansion, right? Now, what we will call this now, because this consolidation area is lapping up with another consolidation. So what we will call that is either we are having a retest, as Pastor used to say, price breakouts and retest. So we are having a retest, but this retest is not a healthy retest. One of the things Pastor mentioned is when we are having consolidation, we are having build-up of orders. So let me explain it. Me and Samuel, we are bidding for gold. I am buying gold at 520. 520. Samuel is selling it. So I buy gold at 520. I am selling it to Samuel at 530. Now, immediately Samuel is buying it at 530. Samuel is now offering it to another buyer at 521 because he doesn't want to make too much profit. I'm selling at 5, I'm buying at 520. He is going to buy it for me at 530. He will sell it at 531 to another person. Now, when we now have group of sellers together that are more than the buyer, so let me put it this way. If me, OJ, and Dominion decide to buy gold from everybody at the back, we are 3 buyers, you people are 4 sellers, right? You want to sell gold to me, I am buying it from you. When I buy it at 520 from you, right, I need to sell it to another person to make what? Profit. Now, if the people that want to buy it from me are more than what I can offer, right, the value of my gold will appreciate. Do you understand? So now, only me, let me put it this way, only me bought gold from the 4 of you, right? Now, I want to sell to the 6 of them. This person is telling me, I want to buy it at 525. I say no. Anu is like, bring it at 530. OJ is saying 535. Samson is saying 540. Now, the value of my gold that I have not sold is appreciating. And it will keep appreciating as far as the demand from them keeps going higher and higher. Now, immediately I sell it to Samson at 550. That's the new auction price. So anybody that wants to come and buy that gold now from Samson needs to buy it at 555, 560. Now, if there is nobody willing to buy it at that higher price and they want to buy it for a lesser price, Samson has no other choice than to sell it, because there is no willing buyer to buy higher. That is what happens in the market. So sometimes it could be profit taking, and sometimes it could be that somebody is trapped in an auction. Let me put it this way. Somebody bought gold here, right? Now that person doesn't see another willing buyer to buy it. What does he have to do? He has to sell it off. Now, at a lesser price. Now, if he's going to sell at a lesser price, let's now say, for example, Samson now sells that gold that he has bought at 555. He now sells it to 8 people at 540. Me, that I started the bid at 520, I will not buy it. I will wait for price to come back to 520, where I will buy, because I know I have made profit. So that is why you have market cycle consolidating, because they are bidding for the price. Now, when we are now having more buyers than the seller, that's me that I bought it, I want to sell it to you people. When we are having higher price keeps going up because they are bidding more for it. I don't know if you people understand. Now, by the time they don't have anybody bidding for that higher price again, price will keep dropping. That is what you are seeing here. And sometimes it could also be that me that I have bought it, I now sold it for a bigger price. So immediately I sell it, right? Everybody starts selling. Because for gospel to sell is gold. Me that I'm holding gold get my point too. I bought gold at 520. There is somebody else buying at 530. There's somebody else buying at 540. Now, me that I bought at 520, I sold my own. And I am holding the lion's share. Let's say out of 100%, I am holding 70% of the gold. And I sell 20%. Somebody that is holding 5%, what do you think he will do? He will follow me also. So now you are having price drop. So now this consolidation that we are seeing currently, they are bidding for the price. So they've not had more buyers than sellers. We are having equal buyers and sellers. Now, immediately counterparty switches. That's when you will start having price breakouts either to the upside or to the downside. Because even you, that you are placing your trade on MT5, for example, that's why you used to put break even. When trade starts moving up, it is always advised that you lose your profits or you don't risk your capital again, right? Now, if price comes back and tap you out, that trade has automatically closed. Now, most of these hedge funds, they don't use stop loss. So they actually trade real money. They are moving the money somewhere else by either transporting goods or doing something. So right here now, we want to wait for them to decide what they want to do. And one of the things you can use to also decide is what we call this VWAP that Pastor mentioned, right? Once you put the VWAP, and the VWAP is very close to the candlestick, it means we are having more volume. We are having build-up of orders. So by the time price start expanding out, we can now know where price wants to go to. Now, one of the things you will use, because I think this will be a very, very big confusion, is number one, the health of the candlestick will determine the breakouts. So let's say, for example, price breaks out here, right? But closes back in this range with a wick. It doesn't close full. I think I should find something like that. let me find a consolidation like that we can use. Okay, this is a very good one. Now, this is a very good one. Now, we can see that we had a range here, right? Price slowly broke out. I want to change the color of this thing. If it's possible, change it to black. So that we'll be able to see it. Okay, good. Let me off this VWAP. So now we have, what can we say we have here? Equal lows. No, something else. What can we call this zone? It's a key zone, yes, but what can we call it? No, it's not resistance. It's a support zone, right? This is a support zone. So now we can mark this zone out. That okay, this is a support zone. Then we can also mark here and say, okay, this is a resistance zone. Good. Now we are in this range. Price starts breaking out. Now, in this range, we cannot get a confirmation on our moving average because we are in a range, right? And the range is below the moving average. And I told you guys that one of the things you should know is we are going to sell below the moving average, buy above the moving average. So first things first is we are not seeing lower lows here. So market structure already tells us that we should wait. This is a consolidation. So no lower low, so no entry. No higher high also. We only have this high here, this one weaken out, right? One of the things you should know is weak serves as an area of confirmation to show you that price got there, but sellers or buyers, either below or above, pushed price back. So it's like saying somebody is like tug of war. When you are having sellers pushing price up, then they got to a certain point. Sellers almost lost the tug of war. But either somebody stronger or they got the momentum back to push price back. That is what happens with the wicks, not the body. The body is like the area of war. The wicks is like the extent where they almost, for example, if we are having tug of war, it is still the last person at the other side crosses the line. When that person crosses the line, they've lost the tug of war. So the wick is like saying the fourth person crossed the line. It remains the last person, but strength came and they pushed it back. So that's the meaning of the wick. So now we now have price slowly break out. Number one, confirmation. We've broken out of this range. Number two, price is above moving average. So we already have two confluence with us. Now, what are we waiting for? We can't buy from here. It's too expensive. We need to see a retracement, profits being taken. That's why I think Dominion said it yesterday. I used to tell my people that always think like a buyer and seller. Don't just come to the market and say, let's buy. Always think that if I want to buy this market here, is this not expensive from here? It's too expensive for me. So let me wait for a discount. Let price give me a discount. Maybe they want to sell tomato, a bucket of tomato, 5,000. I said no. I can go to one and she will give me 3,500. And if the IR doesn't give me, there will be Aboki that will give me. Because you already have it in mind that there will be a discount. You will look for the discount. So you will have to look for that discount. And one of the ways you can look for discount is from a consolidation, we want to see price come back to tap that consolidation zone, which is 1. So now we've had price come back here. You can see it. Price tapped our consolidation zone. So now that serves as a what? As a discount for us. Now, what do we want to see? We want to see follow through. We want to see healthy candlesticks. This is all your confirmation you need to place your trade. So once you have a healthy candlestick, you can start looking for your entry from your microstructure. This could be a 1-hour chart. You can go to your microstructure. Now, I used to teach candlestick entry, right? And one of the ways you can utilize candlestick entry is through your zone, right? If you have a zone and price comes and tap that zone, if you have your zone, right? If you have your zone and you have price come and tap that zone, the last candlestick, which is the bearish candlestick that you've seen that tapped that zone, you want to see, can the opposite candlestick engulf it? Now, it could be one candlestick, it could be series of candlesticks. So, for example, this is a red candlestick. We now have 2 bullish candlesticks. As far as they can take out this last bearish candlestick, that is a confirmation. As far as I have my candlestick above the moving average, we've broken out of a range, we are in a support level, I can pick my buy. I don't know if you understand. So, for example, this place, right, when we extend this support zone, let me delete this one out so we can be able to see. Let me make this a bit darker. Yeah, exactly. So now you can see right around here, now for most of you that are always thinking, how do we enter? What is the entry? Are we just going to click buy? First confluence, we've broken out of a range. Number 2, we are above our moving average. Number 3, we are seeing a retest of our consolidation zone, the top. Now, 4 is the candlestick that touched the zone. This is it here. We want to see an engulfing candlestick. That is, in candlestick anatomy, we have what we call the wick, the body. Now, in the body and the wick, this wick up here is the high. This is the low. This is the open. This is the close. So what I want to see is, I want to see another candle close above the high of the wick of that previous candle that touched the zone. So this is it here. That is your entry. Now, once you have your entry, you put your stop loss, as Pastor always say, below your low or below your supply zone. So I was telling them yesterday that we have 2 types of yes.
Most market is going sideways like this. I've noticed that it's about to get bullish.
Okay.
Change trend.
Okay.
We have to enter when the next candlestick we are seeing is bigger or longer than the week.
No, that's not what I mean. I just told us now that there is confluence. Confluence is when you are adding 2 to 3 things together for your confirmation. Number 1 is you are buying above the moving average and you are selling when your candlestick is below the moving average. So in this case now, you are having a market cycle, and the first market cycle, as human beings, if you run, you will have to rest to get energy again. So this range is like market is sleeping. They are not doing, the market is working. When you are sleeping, your body is still working, you are breathing. So the market is still functioning, but there is no activity, like there is no full activity. So when you have a breakout, market has woken up. Let me just put it that way in a lame form. Now, when you now have a breakout of your consolidation zone, we want a retest of that zone. It could be a high, it could be a low. When we have price breakouts, we want to test that zone. Now, what I'm saying is, if it is a low, if it is a selling trend, you want your candlestick to be below your moving average. If it is for a buy, you want your candlestick to be above your moving average. Now, it has fulfilled those two things here. A retest above our moving average, right? And a breakout of a consolidation. Now, I'm now teaching you an entry technique, because most of the times, what most of us used to think is, how do I enter? When do I know that is the particular point I enter? So after I've gotten my 3 confluence, 2 to 3 confluence, when do I know I enter? This is the way I enter. When you have a zone, you wait for a candlestick to touch that zone. Now, immediately that candlestick touches that zone, you want another candlestick to engulf that candlestick outside of that zone. So this is it here. You are having this candlestick touch this zone. You are having this one engulf above it. I don't know if you understand. Let me look for another example so that we can. Ima, are you with us? But what?
What about this entry? Waiting for the candle to close up instead of like, oh,
Waiting for. Okay. I'm trying to understand what you are saying. I'll come to that. So now in this case, right, Samuel, you marked this high for us yesterday, right? That this is your resistance level, right? From what I just said now, will you pick a buy here? From the example I just gave before, is there a confirmation here for a buy? Looking at the chart. Because I just taught you entry technique. So from looking at this chart now, what was the first thing I mentioned? The moving average, right? That's number 1. So is it above the moving average? No. Is between or below, is below this one, right? So that means if we are buying, is a no. So first confluence removed out. Now, but our second confluence is telling us that price just broke out and is retesting. So what are you going to do? Ima, what will you do? What's your buy confirmation? What's your buy confirmation? A breakout. Where? Here? Here? A breakout here of, come and show me, please. Sorry. Maybe.
So it tested this point and so it went up again and when it's consolidating currently.
It's consolidating, okay.
If they are also waiting for a price, it's consolidating is You notice that the rest candles that are there are not LG. The rest candles are MSA.
That are more healthy, right?
So it's actually still going to most likely be high. So just wait for probably because competition is making it. So just wait for probably in place.
What if candle keep selling? What if market keep selling?
I don't know. So that's why I have to buy again. If it's that's not plus out. Don't put that. My bias is just buy like this.
Your bias is buy. Okay. So your bias is because we had a breakout and a retest.
Let me see the previous. Like let's stretch it out.
Previously is a bullish trend. Most likely it's going to be a buy.
It's supposed to see a very LD,
Bearish candlestick. Okay.
This is back. That's about to pick itself. But we'll see there. But currently it's ranging as consolidated. So right now we're not a trade. Let's go to 5 minutes. I don't use 15 minutes to trade.
Okay, you don't use 15 minutes. Okay. Good.
He's still biased. He's still biased to pick right now. From this place, what I can see is, I think the green candlesticks are still LD than red candlesticks. I don't know. So my bias is still buy at the end of the day.
Okay, so you are using, he used two confluence to keep his bias bullish. And his first confluence is breakout, retest, and the health of the candlesticks. The green candlesticks are more healthy than the bearish candlesticks. So his bias is still bullish, but currently he's not picking a trade because he's not seeing a confirmation to pick a trade. So is there anybody that sees a trade right here? Nobody's seeing a trade.
But I've seen the trade sort of in film like that. Yeah. It's blue 50. So just pick it.
Oh, you've picked a buy. Wow.
Yeah, if you do, that means it's even blue.
That's awesome. That's awesome. So where is your stop loss now? Give us hints now. Your stop loss is at where? So let's quickly check another asset class. Any other asset class? We have just 10 minutes left now. We are stopping by 10:30. Any other asset class? Any other asset class? GBP USD. JPY. Okay. Okay, GBP JPY. Okay. Farouk, what do you see? You are seeing it ranging. Okay. Is anybody in support of his idea? Is the market currently ranging? Any objection? Anu, what do you see? He's an Agba trader. Don't turn analyst finish. Okay, so Farouk said that market is currently ranging. Anu is saying that market has broken out. So who is in support of Farouk? Who is in support of Anu? Who is in support of Anu? The market has broken out. Who is in support of Farouk? nobody is in support of Farouk. So far, you are in support of Farouk, sir. You are in support of Anu. Okay. So actually, price was ranging. You understand? It was, but currently, this candlestick, because we are on an anchor time frame. Okay. We are on an anchor time frame. So, and this candlestick alone is a very, very good confirmation. First confirmation is we have an engulfing candle. Number two is we are above our SMA. We've broken out of a consolidation. No problem. Okay.
Everybody.
So put your long position there now. No, this one. That's long position. You have to learn it. Oh yeah, place some on top of this line. On top of this line here. This one.
The mid one.
And there you want me price come back. So you tap on.
So
where will your stop loss be? You have to go to your lower time frame. I hope you know, Sha. You have to go to something like 15 minutes. Everything you want to do. All you just need to do is like this. So where will your stop loss be?
stop loss will be
Below here, right? Yeah, drag this line, drag it up there.
Yes, I'm picking it, but I expect the price will come back to this place. Coming to this place on the buying back.
Okay. Okay.
But I'm thinking again, is it safe to put my stop loss here, or should we just be doing it?
It's safe now. What type of stop loss did you use now?
I know that there's structural, I know that there's trading. My one is that.
So this structural stop loss,
Structural stop loss.
you
So,
put it at a low.
please, the question so that.
Okay. Under the low.
Under the previous low.
Yes.
Under the
So
previous low.
this is the previous low here. Now it depends on you. Some people are very, very hypersensitive. They will put their own here. So and some people can still put their own as far back as here.
Stop loss should not be
No, it shouldn't be too big, but your TP is 2.1.
So now, at this now, what's the risk reward ratio? So look like risk.
This is
2.2.
1:2.14. So you are going to make 2.14%
TP.
as TP. Yes.
So at the moment now, my TP is what?
Drag this down. Drag it down. That's your TP.
So overall, this is a good trade.
And it's a good trade now. Since you have it, we'll lock it.
Stop loss below the previous low, TP above
The previous high.
stop loss below previous low.
So I think No, you are not buying yet, though, but you put a pending order. So we'll all put a pending order. Let's put a pending order now. It's from your analysis now. You also said it's demo account now. Okay. So we'll come to the end of the class. Thank God. Men supporting men, Jerry. Thank you. You be